What do we got on the agenda today?
Talk to people.
Good. Let's talk about
Home loans.
that's pretty novel.
All of them. Navy Mom Donna already in the house.
What's up, Navy Mom Donna? Great to see you. Welcome to the broadcast.
I haven't seen you since yesterday. Yeah. That was almost
that
24
go live?
hours
Does that
ago.
go live or no?
Yeah. That
Doesn't
go
look
live.
like, dude. We're not seeing. It's not showing up
That
live here.
Go live.
I go live. There we go. Somebody's
there
here.
We go. All right, everybody. You know
Somebody's
why
here.
you're here. You're here to get all your questions answered about buying houses. So whatever your thoughts are about buying houses, whatever your concerns are, make sure you fill up that chat box with all the thoughts that you have. And give us scenarios, guys. Give us your actual scenarios about what you guys are dealing with out there in the real world about buying houses. So your credit scores, your income, your situation, your marriage, your divorce, your...
KK in the house. We haven't
Hey,
seen
guys.
KK in a while.
Where you been, KK?
What's up, KK?
I've
Great
been
to
right here.
see
Where you been?
We're great to see. Celso Luna's in the house. KK.
Celso,
Andrea.
long time no talk, Celso.
What's up?
It's been like 45 minutes or something.
Tanyo Chickman is here. What's up, all?
Yeah.
Hey, you want to know what's going on in the market? Want to know what's going on in the housing industry? Want to know about the tough loans? Oh, we're here to tell you some stories. Some stories.
Maybe Mom wants to know how it's going.
So here's what's happened. It's really strange last 8 weeks because the Fed cut the
Curious Tale.
Curious Tail joined. What up, Curious Tail? So the Fed cut the prime rate 50 basis points about 6 weeks ago. About somewhere in that range, about 6 weeks ago. Lee, do you respond directly to messages? Sometimes. If you do it by text, yes. If it's on TikTok, we get to them sooner or later, but I don't respond every day on so text me directly and we'll get you your answers. So Fed dropped the basis points and then all of a sudden the market started going down and we had some good numbers come in. After the good numbers came in, then numbers came in bad. And now rates are back up high, like really high, and very scary for everybody in the mortgage business because we have a lot of people. So what do we do for a living? So we know a lot of loan officers, we know a lot of realtors, everybody in escrow, title, and everything just dried up like dried up. And then now that the presidential, I don't know if you heard, but there's a presidential election going on. It's going to be happening, I don't know, next week, 2, 3 or something like that. And when that happens, that affects the markets. And because they predict an orange man to win, the markets do, I hope they're right. If they predict the orange man to win, for some reason, the markets are tightening up and they're going, oh shit, and everything's going up. And it's a little scary right now and very difficult to get a house. What do you got for me, man?
I'm going to come to you guys and say it's not that scary. He's giving you doom and gloom. He's trying to treat you like the regular news does. But here's the truth.
No.
So rates were high, and then they dipped down a little bit, and then they went back to where it was. So we've been in the same situation for the past 2.5 years. So when you say they went way back up again, we're in the same spot that we've been in for the last 2.5 years. Now, is it a good market? Do we have a ton of deals that we're funding? Is there a very tight belt right now?
Well, dude, if I'm treating you like the regular news, I'm just going to say, hey, you don't have any problems. You already own a house. That's it.
So you're assuming that everyone there owns a house?
No, that's what the news is telling you. Everything's fine. Groceries aren't expensive.
They're not saying everything's
You already
fine.
own a house. Yes, they are.
No, they're
Oh,
not.
yeah. They're saying
They're
that
telling
the
you about
economy's
the
on
murders. They're telling you about how you should be scared. They're telling you about the C word. They're telling you about all that stuff that exists to try to make you
hungry.
fearsome so you keep watching.
Somebody says, user 2426 says, hungry. You guys are starving. Love it. I don't know
Tight
what that
belts,
means.
man.
Yeah.
Tight
I don't know what
belts.
that means. I don't know
No
what that
doubt about
means.
it.
Lee, did you have a cell phone number? Hey, what is that?
I don't know.
Millie Bo. Right here, we respond to all of our text messages. If you text me right now, it's not going to come through. If you call me right now, it's not going to come through. After I finish this live, there's usually a whole bunch of them. He gets a bunch, I get a bunch, and we respond to them.
Yeah.
And we can answer most of your questions on this live, unless it gets too personal, then I don't want to.
Too personal. All right, let's get to a few of the questions.
All
But
right,
before
cool.
I
Let's
do, if you're interested in getting a home loan, go to the link in the bio, select apply for a home loan now. If you know your credit is crappy and you want to fix it, go to the link in the bio.
Credit.
Yeah, go to the link in the bio and go to Fix My Credit. Let's start with Navy Mom Donna.
What's up, Navy Mom Donna?
She said, please explain how I can sell and then buy a house without paying a bunch in taxes.
Okay, so there's something called your cost basis. Your cost basis is how much did I pay for that? So there's a line right there. Then there's how much did I profit when I sold. So the only thing you pay for on taxes, now I'm not a tax pro, I've just seen this a lot of times. The only thing you pay for is the gain. So that's called a capital gain. So if you immediately turn that into another residence, you might be able to step up your cost basis if you got a more expensive house. So that's one way to do it, but don't take my advice because I am not a CPA. I am not an accountant. I've just seen it done a whole bunch of times.
Dude, out of everyone I've ever known, I don't know anyone else has had their personal IRS agent. How do you not know?
I had two on speed dial. That's not even a joke.
Personal.
I know their names.
First name basis.
I know their names. I could pick up the phone and call them and they'd be like, hey, Lee, what do you want?
So what can she do?
So if you want, find the house first. We'll qualify you, find the house, and then we'll figure out how we configure your departing residence to your procuring residence, and then we work all that stuff out for you. Done.
But what if she takes all that equity and dumps it to a new house?
That's good news. That's really good news. There's no real tax issue. There's a
1035?
Yep, 1035 exchange when you can do a like for like purchase, which means if I have a residential home and I buy another residential home, well then like for like profit goes into that. We're good to go. If it's an investment property and you went to investment property like for like, it has to be like for like. That's what it has to be.
There you go, Navy Mom. Let's get that going. That guy said, what type of loans do you offer?
Orale, what type of loans do you offer, bro?
Home loans.
All right, cool. Home loans, yeah. Only home loans. We don't offer car loans. We don't offer personal loans. We can't help you with a boat. Wave runners. Wave runners are fun, man. I love wave runners.
Unless they do a cash out refinance.
No, that's still a home loan, but they just what you use it for.
Buy a wave
I
runner.
see what you did there. I see what you did there. Hey, it's conventional conforming, FHA, VA, Fannie Mae, Freddie Mac, USDA, and a whole horde of alt QM mortgages. Alt QM mortgages mean they do not fall in the category of qualified mortgage, but there's a different way to deal with it.
I don't like saying this, but it's correct.
Tell me.
I was wrong.
Oh,
Maybe Mom
shit.
Donna said, I thought it was 1031 exchange.
It depends. There's two different articles in the IRS.
Dr.
1035
eviled me.
and 1031. And there's also a 1036.
1 billion.
Whoa! What?
There's also a 1031, 2,
Yeah.
3, 4, 5.
Nope, there's not.
Oh, yes, there is. Those numbers exist.
They do exist. I'll give you that. Yeah.
All right.
We said that. Do you respond
Yeah, I
to
got that
hungry?
one.
Got
Rates are not even that high, said Chris Bacon.
Yeah, Chris Bacon, you should come and work for us, fund a whole bunch of loans, and I'll tell you you're right as long as you're funding those loans, man. I will tell you you're right as long as I'm making a bank load of bucks while you do it.
All right. B. Naeli. Is it true that USDA loans are lower than FHA and conventional loans?
Bay now. Okay, so you're going to get a crash course in loans, so you better be ready for a crash course in loans. FHA, USDA, and VA are government. They fit in the government category. They're directly government. Fannie Mae and Freddie Mac are GSEs, government-sponsored enterprises. The government has some say in it, but they don't absolutely run them. So, FHA, USDA, VA all fall into roughly the same guidelines. There's a little bit of difference, but not a lot. And when you price them, they're going to be close to the same. There is one caveat, and that is on an FHA, there is a mandatory 0.55 mortgage insurance, MI, or a 0.50 depending on how much you put down. On VA, there is no mortgage insurance, and on USDA, there's something called GI, and that's government insurance, which is 0.35. So there's a little variation in all of that, but when you price the rates, you're going to be pretty much the same across the board.
Yeah, so Finale now says interest rates.
Interest rates. That's what I just said.
Now they want to know what they are. What are the interest rates?
What are the interest? Oh God! I guess I'll have to say it. Here we go. This is not my rate to you. The only way I can quote you is to pull your credit, calculate your income, find out your assets, and build your profile. However, if you went to the New American Funding website right now, like right at this moment, you would see that a VA 30-year fixed, 5.875. An FHA 30-year fixed, 5.875. 15-year fix, 5.625. and a 30-year conventional conforming, 6.25. Now, I will say they're putting the best case out. This is New American Funding website. If you don't believe me, you can go to the top of our bio. It says links, cool stuff, today's rates. That's it. You'll be able to see exactly what I'm seeing because we pull them up every single day. But I will tell you, this is a perfect file. This is 800 FICO, 60% LTV, 40% DTI. Perfect file. Most people are not going to fall in this. I locked one real life about 2 days ago, 6.99. 6.99. That was decent rate. You could have bought it down to 6, but I made a case for why you shouldn't, especially if you're financing with New American Funding, because we will do a free refinance for the next 5 years.
All right, our mega fans are coming out. They said, hey, please buy a house, please. They're desperate.
Yes.
Sell it, fellas.
We don't sell houses, man. Yeah. We don't sell houses, user 2426.
First, get your target accurate.
Yeah. We don't sell houses. We provide loans. That's correct.
Juan Hernandez, thank you for the love.
Juan Hernandez.
D-Bad back in the house. They told me I got to pay $3,400 for a $390,000 duplex. Still got to pay $2,100. Other side, 3-bedroom, 2-bath, one rented, $1,350 a month. Is that good? Should I buy?
BD. I don't know. Because I don't know your overall scenario. You're trying for an investment. Does it fit into DSCR category? If you're trying for DSCR category, probably not going to work. If you're trying and you're going to get the primary one of the units and live in it, well then it's not fully an investment because are you living in the right neighborhood? There's a lot of factors. And what's your FICO score? That's a big one. Because if you're telling me all this stuff is going on and then right after you're done you say my FICO is 622, I'm going to say, shh, take this deal because nobody's going to give it to you. That's the best deal you'll ever get with a 622 FICO. Now, if you tell me your FICO is 800, I'll be like, I could probably beat that. So a lot of it has to do with your FICO.
For a $390,000 duplex, I don't know where it's at, but that seems like a good deal. I mean, to get 2 units for $390,000, I don't think that's a bad price. Now, D-Bad, where is this location of the property? City and state, please. User, our biggest fan is back. If you've got anyone with a low rate, stay put.
I agree with you. User 2426, we agree with you.
Yep.
There's a lot of people who come to us. They come to us, they're like, hey, I got a 3.4 rate. I was thinking about getting some cash out. I'm like, yeah, I don't know if that's a good idea. And it's counterproductive for him and I because we'd make a lot of money if you did a cash out. Mm-hmm. But I'm telling them, listen, you got a 3.4 rate. We're not going to see that for a very long time, maybe never again. You should think about either a HELOC or a different way to get that money because it's really going to cost you. They're like, Lee, well, if I get a high rate right now, I can refinance. Yeah, you could probably refinance. My guess is you might hit the 4s, but you're not going to hit the 3s ever again. You should stay where you're at. Don't get rid of that. Even though it's counterproductive for our business, it's probably the best thing to do.
Now, if you got a house in the last, let's say, inside of 2.5, maybe 3 years, your rate's going to be high. If you did a cash out refinance, your rate's going to be in the same neighborhood. So that's not a bad bet if you needed to access that cash, though. A. Hernandez, what are today's refinance mortgage rates for a 30-year conventional with a 750 credit score?
FHA?
Sounds like you're in escrow.
No, conventional. Yeah.
Are you in escrow, A. Hernandez?
Yeah, it does sound like it. 30-year conventional. If everything was beautiful, 750 is pretty darn good. It's not perfect, but it's pretty darn good. You're probably 6.25, 6.5, maybe a little higher than that for a conventional, maybe a little bit higher than that. There's a few other factors we have to take into consideration. What are you being told, Hernandez?
Dun, dun, dun. So, guys, know this. When you go to the websites, I don't care where you go, Bankrate, Bank of America, New American Funding, everyone's going to get pretty close to the same data. But it's what this guy just said. It's going to be the best case scenario. Yeah. So if you're looking at website interest rates, it's probably not going to be what you're going to get. What you need to do is get pre-qualified so we can actually put your file together, pull your credit, calculate your income, import your debts, do all the work that we need to do to give you an accurate idea of where you're going to be with the interest rates and your payments. So just my recommendation. For the rest of you, if you're interested in getting a home loan, go to the link in the bio, select apply for a home loan now. And those of you that are watching, I think it's 4.3 million total. I want you guys to give us hearts and shares because it helps more people come in to ask more questions. We need more questions, guys, so load up that chat box.
Credit score 780, thinking FHA. All right. So Boss Be Great. I like that name, Boss Be Great.
Boss Be Great.
780. Now 780 gives you like latitude, which means every lender's going to want you. Every lender's going to want you. So this is one where you either need to go with someone who shops multiple lenders, or you need to shop the lenders yourself. We're a direct lender. We have a New American Funding line that we can put people in, and we put most people in the New American Funding line. However, we do shop Wells Fargo, AmeriHome. There's a bunch of different mortgage companies that we shop, and we can actually get a better rate. I can beat a Wells Fargo loan officer with their own product because New American Funding sells like $100 million of loans a month, and that retail loan officer sells $2 million maybe. So it's a different concept. We are able to broker through $2 million right now is a fucking great loan officer. This is a good loan officer. This is a really good loan officer. So 780 FHA. There are some other factors that you should think about. So Boss Be Great. At that high of a score, you should look into UFMIP. UFMIP is upfront mortgage insurance premium on an FHA. Every FHA loan has it, and it's 1.75% of the loan. 1.75. So if you have a $500,000 loan, the UFMIP is going to cost you $8,000. $8,000-ish. $8,000. And you don't get a choice. You don't get to say, no, I don't want to pay it. No, I don't want that. No, I don't want this. You know what you get in exchange for that? You get the ability to do 3.5% down. So when you go FHA loan, you can go 3.5% down. But you're going to pay UFMIP. If you went to conventional with a 780 FICO, no UFMIP. You would still have MI, but with 780, it will beat the 0.55. It will beat the 0.55. That's just experience talking. And you will have to put 5% down instead of 3.5. So it costs you a little bit more down, but it saves you $8,000. And the MI falls off at 80% LTV. On an FHA, it never falls off.
All right. Noah Lowry said, can I get a home with 0 down on SSDI with a 700 credit score?
Theoretically, yes. Practically, no.
It's challenging.
Yeah. Theoretically, yes.
With a cosigner.
Yeah. Here's what happens. They don't discriminate where you get your income. Nobody gives a shit. Nobody cares where you get your income.
Yes, they do.
If you get it from, who does?
They do care.
Okay.
Because a lot of banks won't do marijuana.
Good point. Yeah.
Mm-hmm.
Yeah.
Marijuana income.
There's actually weed loans, and some banks will do weed loans and some won't. But anyway, SSDI. Do you know any banks who don't do SSDI? No, that's illegal. So SSDI is an income. That's it. The problem is it's usually not a giant income. It's a low income, and because it's a low income, we got an income. That's it. Who cares? That's an income. All right. Now we go debt to income ratio. That will allow you to buy X amount of house. And that's it. And usually that's where we run into problem because they're like, hey, I make $1,600 a month on SSDI. Can I buy a house? I'm like, what other sources of income? That's it. All right, cool. Well, then I can go 50% on debt to income ratio. So I'll take $1,600, cut that in half.
Well, they said it's $900. Use that one.
So $900. Okay, cool. So I have $900 a month. Cut $900 in half. I have $450 that I can use for principal, interest, taxes, insurance, all car payments, all credit card payments, all student loans. I have to make all that fit within $450. That's not a loan. It doesn't actually start to become a loan until maybe $1,500 a month. And at that point, it's only $100,000 loan. So if you had $3,000 to $4,000 in SSDI, then it would count. Now, there is one benefit to SSDI many times, not every time, but many times. I can gross it up 25%. I can gross it up 25%. So 900, take 25% of that, which is
more.
25.
Oh, what are you talking about? TikTok hating on us.
Oh, shoot. They think,
your live is not eligible for recommendation and restricted in search results because your live does not comply with the feed eligibility standards. We're getting hit.
We're getting hit. Somebody's getting mad. They're getting mad at us because
they hate us.
They hate us. I think it's because I was talking about A, G, E, and if you say the wrong things, the algorithms just slap you and they don't let you do things. So
likes and shares, guys. That's gonna help us.
Noah Holloway, $900 a month. If that's coming in from SSDI income, then that's it. If that's it, it's real simple formula. 900 a month, cut it in half, 450. With 450, I have to be able to pay for
Thank you for the hearts.
principal, interest, taxes, insurance, all revolving debt, which is credit cards, all installment debt, which is
Thank you for the shares.
automobiles and student loans.
Not tacos. Tacos don't count.
Tacos rock.
Best
Cool.
thing on earth ever made. So Noah Lowry, here's the
Thank
recommendation.
you, Mariah C. Para. Shared the live. We appreciate you very much.
You're going to want to get yourself a cosigner or two. Okay, mom, sister, cousin, friend, doesn't matter who it is. Get a cosigner. You can use that SSDI towards a house, some of it, but it's not going to work if you're looking for, anything in California for sure.
So
Mariah. Oh no,
I don't know what that is. There's
It is
no
Mariah.
username, is it?
Yeah,
I'm paying
no.
cash for a house. Do I need a personal realtor? Can I just buy the home I see? So, Mariah, yeah, you can just buy the home you see, but I'm going to give you some real problems that happen. Like real problems. Real problems. So, when you walk through a house, you go, hey, this is a pretty room. This is a very nice room. What you're not seeing is this. You're not seeing that the roof is whiter in this room than it is in the other rooms. Why? Because you don't know how to look for that. But if you have a good realtor, that realtor is going to go, hey, this roof is whiter. Why? That usually means there was a water leak, which means there was a roof leak and there was damage. But they fixed it so they can sell it. Oh, wait a minute. Then you go to the side and you're like, hey, such pretty walls. And the realtor looks at the top corner and it sees it separating just a little bit. And the realtor goes, there could be foundation issues with this. There might be some foundations issues on this house. If you don't use a realtor, it is buyer beware. You could land up with a very bad situation. Like I've literally had people not use a realtor and the foundation's cracked under the brand new carpet. Now, you might be right. You might be able to take them to court and say, hey, you didn't disclose a material fact. That could happen 3 to 5 years and $20,000 to $50,000 in lawyer costs later.
Thank you for the hearts.
Could help. That could happen. I use a realtor. I'm in the business. I have a real estate license. I don't pretend I know real estate. There's certain things that they look for that I could never see. I look at it and I ask realtors whenever I go through a house with them, like, what are you looking for? And they're like, Lee, see that right over there? See that? Yeah. You see how the paint is perfectly smooth in that area? There was a hole there. Why was there a hole there? Was there plumbing that had to get fixed? Was there a kid who put a hammer through the wall? We got to figure out why. They look at things differently. And then that's before they even tear into, what was the chain of title? Did this go from nothing to somebody who didn't really build it correctly, to the uncle, to the brother, to the cousin, and now they're selling it to the regular market? You don't really know what's in that house. You never know if it was built to code. You have no idea. So you can technically not use a realtor, and it would save you 3% most of the time. I choose the realtor as an insurance situation because they have rules that they have to follow. They don't get a choice.
Yeah. So recommendation is get an agent.
Yep.
Mariah C. Para, my monthly income is about $4,500, but my credit score is low. Will I still be able to qualify? How low, Mariah? We need those answers.
Can you go?
Because here's the
How
thing.
low
Some
can
people
you
think that scores in the 600s is low.
Yeah.
You can have a 690. That's low. But it's not when it comes to buying a house, okay? So here's the truth of it. The minimum credit score we work with when it comes to buying a house is 580, okay? 580 is very challenging to get a loan. 600 is very challenging to get a loan. But once you hit about 620, I can say that your probability starts to increase and it's probably going to get approved. I would still try it at 580, 600, all the in-betweens. But at 620 is where you start becoming golden. So it depends on how low. Mariah, you just hit the target, 580. You meet the guideline, but could be challenging in getting an approval.
Give Chris a call.
Yeah, so what's going to happen is we're still going to put your file together. We're still going to see where you stand. There's a great possibility that you qualify. But that 580, there's a reason why you're at 580. So do you have a lot of lates that are current? Or is it because you have maxed out credit cards? Two totally different problems. One of those is likely to get an approval. The other one's going to be very challenging. Mariah, there's our phone number. Call us if you're interested. And for the rest of you, go to the link in the bio, select apply for a home loan now to get the process started. Noah Lori, back in the house. Well, my girlfriend makes $3,500. See, there's the cosigner.
There's a cosigner.
But her score is in the 600s. Can you help him?
So maybe you're in a category where if the score's in 600s and what you see as 600s most of the time is not what a loan officer sees. We use a different FICO model. So when I pull credit, I use something called FICO 8 model. Most credit card companies use FICO 5 model or FICO 3 model. So they're different models. So I have to pull your credit to find out what it actually is. It's usually way different than you think it is.
Yeah.
And if you guys are on the same house, yeah, that can happen all day long. It's just income. Just income. There's only 3 legs to a loan. 3 legs, like a stool, 3 legs. Income, credit, assets. That's it. Between those 3, I can tell you whether you qualify. So that's why when you asked earlier about the SSDI, the income's so low that it doesn't. The other 2 doesn't matter how good the other 2 are, it doesn't work.
All right.
But if we have the income, we're good to go.
There you go, Tony Choppa. That's like Chapo, but it's Choppa.
I'll Chapo.
What if I have good credit, but I've only been at my job for a few months? Great question.
Very good question.
I love
Tony.
it.
How old are you?
I know why he's asking this question, but it is not pertinent to your approval.
It's not pertinent to your approval. Here's why. Because if you are, it doesn't matter if you're what age you are,
30?
but yeah, if you came out of nursing school and you did 4 years in nursing school.
Dude, you gave him a girl job.
All right, 48. So
And he gave you a girl job.
you came out of, dude, you said girl job? You're
Yeah.
going to get us canceled.
I
Dude, you're
probably-
going to get us canceled.
I'm okay with that.
Okay, you came out of engineering school.
Yeah.
Yeah.
Ninja.
America. MAGA. I mean, America. So if you came out of engineering school and you've been in engineering school for the last 4 years, oh, you're toast. Oh, we're toast.
Aaron.
Last 4 years.
not an
last
attack.
4 years. And then, you know what? Elon Musk hired you because you're an amazing engineer. He said, hey, you know what? I'll pay you 200 grand a year because I'm Elon and I can pay you whatever the hell I want to. So 200 grand a year and you've only been there 1 week. Well, if your last 4 years were for the profession that you are working in, I only need 1 week at your new job. I only need 1 week. I can actually do it with an offer letter where you even started the job. You have to have started the job by the time we close the house, but I can get you into a house with just an offer letter. So if you've only been at your job for a few months, not a problem. As long as whatever you are educated for is this field that you went into, at least close to it.
I like that, Tony. I like
Now,
that.
if you used to own your own business, now things change a little bit. By a little bit, I mean a lot. Here's why. Because you filed taxes for the last however many years. If you're 40 years old, then you probably filed taxes for way too long, 22 years or more. And last year you made X, and the year before that you made X. All right, cool. And then let's just say you were a truck driver and you ran your own business, and you were an over-the-road trucker and you made 100 grand a year as an over-the-road trucker. All right, cool. And how do I know that? Because you're going to send me your last 2 years' taxes. 1099 came in from JB Hunt, and they said, hey, he makes 100 grand. All taxes, we make 100 grand. Cool. Last 2 years. Then you're like, you know what? I'm tired of being a 1099. I want to go work for Walmart, who pays W-2. So Walmart says, hey, you used to work for JB Hunt. We don't like them, but we'll tell you what, come on board, and we'll pay you W-2. I could probably make that file work. Probably. Now, if you were selling ice cream for the last 2 years and you got a W-2 job at Walmart driving a truck, that's gonna be a lot. That's gonna be tough because it is underwriter discretion. But if you've been doing the same thing, the underwriter goes, oh, I see what you did. You just didn't want to pay for your own gas and expenses and truck and everything like that. So it's roughly the same job. We're gonna let you go on this. Cool. Just show me that you're working. Good to go.
Yeah. What was your business, Tony? What was your business? And I'm going to say that even if it is a different profession, let's give it a shot. I think we can make it work.
That's what I say. Give it a shot.
So Aaron Williams, yes, I did call it a girl job because it is.
Damn, dude, they're gonna get us canceled. We already got a red flag. You don't want it. It's not. It's not. I will say that most of the time,
It is.
it is, but it's not. Just like being a mother.
Is a woman's job.
No, it's not. If you listen to the woke society, anybody can birth a child.
All right. Depending on what station you listen to, blah, blah, blah. So Tony said he had a tow truck business. Now he's driving a dump truck for a company. There it is.
That's pretty close.
There it is.
I could probably make that work. So I'd need your last 2 years' taxes, and then your W-2s for the last whatever you got, and we'd pre-qualify you, buy a home. That's it. Everybody lives happily ever after.
Dude, I follow this guy on Instagram, and he impounds cars. So he'll roll up like real fast, and like his
guys are
F-350 or
crazy.
something, he just rolls up, and like in seconds he has the car up and he takes off, and people are chasing him out there, and
It's
all
like
kinds
15.
of crazy
I've
stuff.
seen it done. We were
We've seen
doing
it
a live.
live,
We were
yeah.
doing a live one time, And we saw a tow truck and we're like, it was a bad day for somebody. We didn't know it. It was the car right in front of us. He like backed up to it. It was gone. Probably 15 seconds or less. Gone. From the moment he hit reverse, he went boop, and I'm like, did someone just get towed? And then some guy comes out, hey! That was funny.
It was intense. So yeah, Tony, you're on the right path, man. So you used to drive before, now you drive again. Same field. You'll be able to get approved.
Don't let him off the hook, man. Aaron, keep shooting at him. Don't let him off the hook. Aaron. I am not going to let him off the hook for that. Aaron, okay with that. I'm on your side.
What's up, Alicia?
Anybody can be a nurse. Anybody can be a nurse. I am on your side.
Yes, they can. Yes, they can. Still a woman's job. Still a woman's job. So, if you guys are interested in getting a home loan, what you're going to do is go to the link in the bio, select apply for a home loan now. If you have crappy credit, go to the link that says fix my credit. We'll get both those processes started. Don't do them at the same time, because if you have crappy credit, let's work on that. And if you want to get a home loan, we'll work on that. We'll get you started. Here's the other thing, guys. Do you need a real estate agent before you do this process? No. It's actually probably better that you get pre-qualified first to see exactly where you stand, because here's what's going to happen. You're going to believe that you're qualified and ready to move forward. You're going to engage with the realtor. They're going to start sending you houses. And the next thing you know, you're going to find one that you love. And then we might give you the news that you don't qualify today. And it's going to break your little heart.
It's going to break my heart.
Not your heart, your little heart.
Little heart.
So what we want to do is make sure you're on the right path. And if you need help with your credit, we'll send you in the right direction. If you need help with qualifying for whatever reason, we're going to help you solve those problems. Because not everyone is qualified right out of the gate, but we will get you qualified. And then once you are qualified to go shopping, if you have someone in mind, like a real estate agent that you want to work with, yeah, we'll work with them. We like working with agents that we don't know. But if you don't have an agent that you work with, we will definitely get you one of the top agents throughout the country, because we work with people throughout the country. Our bank is licensed in all 50 states.
So how many?
50.
50.
50. So whether you're in California, Florida, New York, Chicago, is not a state, Hawaii, we'll be able to help you guys in every single one of those areas. So let us know when you're ready. Also, here's another tip, guys. Once you complete that application, call us or text us, so we'll put you at the top of the list to get worked on. But guess what time it is?
Time for commercial.
Oh, man, I'm supposed to answer that.
Damn. All right. If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the numbers on the screen. But don't dial them right now, because we will not answer. Why? Because we're live and answering questions live. However, just call us after the live and we'll answer your questions. That's it. Bye.
Jack in the Jock.
Jack in the Jock. Jack in the
8.
Jock.
8, because there's 7 of those already.
He's like, ooh, I got a perfect handle. Jack in the... Oh, it's taken? Oh, I know. Jack in the Jock. 1. That's
Damn
taken.
it.
2. 2.
Damn it.
What? Oh, shit. Oh.
All these other geniuses out here.
I know, right?
Just bought my home in May with 5% down. Would you recommend refinancing?
When do you recommend refinancing?
When do you recommend refinancing?
It's math, dude. It's math. It's math. What's your current interest rate at? That's the big question. And then...
We didn't freeze, I promise. I don't know what happened to him. He just
Joe
Biden does.
That's just Joe Biden.
Just Joe Biden does.
Come on, man. So it's just math. We're just gonna figure out if you're at 7%, you can make an argument for you should refinance at
7.125.
10.125. So you can make an argument when rates dip down to the 6s at par, not buying down, at par. You can make an argument for refinancing then. However, if you step back for the macro picture, the Fed says that they are going to bring rates down, or inflation down to 2%. What that roughly translates into is high 3s, low 4s in interest rates. So if you're at 7, you can either refinance at 6, 5, and 4, or you can watch the macroeconomics and do it one time, because each time it costs you money. How much does it cost you? A lot of money. A lot of money. Not a little bit of money, a lot of money. And if you can do it one time and you can hold off, then that's probably the best way to do it. However, your loan officers aren't going to tell you that. They're going to be like, hey, rates are down 75 basis points. You should refinance.
Let's do it.
Yeah, let's do it. And I actually will tell people, I'll say, hey, listen, here's the catch. If you refinance 1 year later, you started a 30-year clock all over again. You did. And if they tell you there's no cost to you, they mean nothing out of pocket that you have to write a check for. That doesn't mean there's no cost. That means they're going to have the cost, but they're going to tack it onto the loan. So it's going to cost you anywhere from $3,000 to $5,000. Do you know how much the loan officer is going to make to do that refinance on a $500,000 house,
How much?
15 grand, anywhere between 8 and 15 grand. That's what they're going to make. Anywhere between 8 and 15 grand. So they want you to refinance at 6, 5, 4. Why? Because that's $45,000 to pay for their, I don't know, Lamborghini, BMW, whatever they drive, Toyota. So that's an extra $45,000 to pay for that. But you do pay for it. There is no gray area in this. You pay for it. And if you get it, then you back up far enough and you go, hey, listen, I'm going to do this one time. I'm going to do it right around this rate, and then we're good, and then never touch it again. That's the best way. And if you're trying to hack the bank, if you're trying to pay the least to the bank, the least, absolute least, what you do is a 15-year mortgage, 15-year, and then add extra principal payments. So you pay it off in 12. The bank makes the least amount of interest in that scenario.
Damn, whoever's doing that has a good job in this economy.
Yeah, I know, right?
This economy's tough. All right, DDL Crew Radio, thank you for joining us again. Long time no see. Is the Fed going to drop the interest rate in the next meeting?
DDL Crew. That's the $50 million question. I'm going to say.
It's like 2.3 trillion.
Yeah, good point. Yeah. I say 25 basis points.
So I say yes?
Yeah, I say yes. I say they're going to have to. Things are not looking good in the economy, man. And it's right after the election, and I think there is going to be I don't know, freak out on whoever loses. Whoever loses is going to lose their shit.
Ooh.
And there's going to be crazy stuff. There's going to be crazy stuff. It doesn't matter which side. Both sides are going to lose. One side has guns. The other side doesn't. So that's a little more scary.
The side that doesn't is going to be crying. Like literal tears.
Yes. And they're probably going to put
coming out of their male vaginas.
Don't say that on the live, dude.
What do you mean?
They put it on their head. So 25 basis points. Yeah, when Trump won the first time, they did that. They wore those on their head. They marched. Yes. They marched on. Do you don't remember this?
I lost the same stations as you.
No,
apparently.
it was all over the news. Somebody tell him. Somebody tell him. Yeah.
Somebody.
Yeah. They put these little makeshifts and they just march to the Capitol going, "You don't have control over this." That was a real thing, dude. I'm not kidding. That was a real thing.
I'm not judging.
That was a real thing. Cool.
Jack and the Jock. What does your crystal ball say? When will we see 3 to 4%?
Hold on. Let me see my crystal ball. Here we go. Oh, we're more. Dear crystal ball, when do we see the interest rates going to 3 or 4%? All right, cool. So my crystal ball said to consult the Fed funds rate chart.
Boom.
And the Fed funds rate chart says that currently we are at 5. This is an older chart. It just happened about 3 weeks ago where they cut the rates. But my crystal ball chart says that we are at 5.5. We're now at 5.0. And at the end of 25, beginning of 26, we should be at 2.5% for the Fed funds rate. 2.5% for the Fed funds rate. That's what my crystal ball says. My crystal ball is consulting the Fed rate chart that you can get at the FOMC website, by the way. Everybody can access this FOMC website chart. And they updated. This is a little out of date, but it's not that far out of date. They're still anticipating rates in about 2026 as the new low of the cycle. 2026. Yeah. Bear in mind, we're in 24. And they're real rough on the quarter of 26. Right now they're saying second quarter 26, we should be at our lowest in the cycle. Second quarter of 26. So if you did it correctly, you would wait till the second quarter of 26. You wouldn't do a 30-year refinance because you start the clock all over again. You lost the first 2 years. You would do a 15-year, and then you would pay extra towards principal, and you'd win.
I would do a 30 still and pay extra towards principal.
You could do that too.
Have the security of bouncing back to a 30 payment.
The truth is, if you really have the self-discipline, you wait
and income.
And income. You wait to this, and you go, all right, hey, Mr. Loan Officer, Chris, can you tell me what my mortgage payment will be on a 15-year? $4,000. What will it be?
$4,000.
All right, he says $4,000. All right, cool. Can you tell me what it'll be on a 30-year? $3,000.
$3,000.
Right, $3,000. So we know that if we did a 15-year, it would cost $4,000. If we did a 30-year, it would cost $3,000 a month. So I do the 30-year. And then I take that $1,000 extra that I was willing to pay anyway, and every month apply it exclusively towards principal. If I do it that way, will I pay it off in 15 years?
Yes.
No. Probably about 13.
Oh,
For the same amount. That's a super hack right there. But you have to have the discipline.
Hi, Chris. Do you work on home loans? Does Chris work on home loans?
Let me check my crystal ball. Yes.
Cristobal is my name in Spanish.
All right. We didn't need to know that.
Yes,
Nobody
we did.
cares.
The
Nobody
world
cares.
needs to know.
Yes, he works on FHA, VA, Fannie Mae, Freddie Mac, USDA, AltQM, DSCR. Think of any others?
One-time construction.
Oh, one-time construct loans. We love those one-time construct, by the way. It's
Do we
crazy.
really? Do we?
We love them.
Do
We've
we?
never seen one. I just like I love winning the lottery. I do love winning the lottery.
Right.
I've never done
Dude,
it.
you're interrupting our fans.
All right.
Navy Mom Donna wants to know, okay, so what are my numbers? Tell her her numbers.
Okay. I'm going to say 67, 43, and 12.
I think you need 6 of them. I think you need 6.
16, 4.
All right, moving on. Alicia said, I have a family member who both have 6, 8. Oh, you guys are killing me here. Killing me. Have 800 credit and her husband. Okay, they have 800 credit scores. They want a $600,000 house, and a lender said with 100K down, their monthly would be about $5,000 a month. So 600,000, 100 grand down, $500,000. Principal, interest, taxes, and insurance with high rate. Yeah, you're in the neighborhood.
Now, I'm going to say, first thing I need to know is what state you're in. Because that's assuming a very high tax rate. That's a very high tax rate. Because a $500,000 loan with a decent credit score, you're in the 4,400, 4,500 range, somewhere in that range.
They're in California.
5,000 is a little too rough. I think you need to shop lenders. I think you need to give Chris a call. You need to call him like right now. Do not pass go. Do not collect $200. Oh yeah, don't call right now because he can't answer. We're on TikTok and Instagram. Cool. All right, we got a good question. Can you explain the interest rate on the closing page versus what you thought the mortgage rate was? Says Samantha Waterberg. It's like Waterburger. Kind of cool. I like Waterburger. You like Waterburger?
I don't know what Waterburger is.
Whataburger. Dude, you don't even know nothing. You don't know. All you think
don't
is
know
In-N-Out
what
Burger, right?
Whataburger
You
is.
just think In-N-Out Burger. That's all you
No,
ever think.
Five Guys, man. That's the joint.
Dude, that's weird, but whatever.
That's the
Okay,
joint.
so can you explain the interest rate in the closing page versus what you thought the mortgage rate was? Yes, your loan officer did not do his job. There's your answer. Why? Because when they're quoting you your first rate, it's a guess. Everybody's guessing. There's no lock at that point. So they're guessing. But when they're guessing, they should tell you, this is going to cost you a little bit or it's going to give you a little bit. They should tell you that. So if I was pricing somebody today, I'd say, hey, listen, I'm going to price your loan at 6.99. There might be a slight cost. They'll say, what does that mean, Lee? I'm going to say anywhere from $100 to $600 in order to get the 6.99 on today's rates. But I'm going to build your loan on 6.99. Okay, cool. Then you get into escrow. That day is a different rate than the day you started. So your loan officer should have said, hey, listen, I just want you to know, rates got a little bit better. 6.99 is no longer a cost, it's now a credit. I can give you $500 back if you keep the 6.99, or we can go down to 6.75. Oh, you want to go to 6.75? Cool, I'm going to move it to 6.75. All right, cool. Then, the minute I did that in the file, I'm going to send out what's called an LE. That's loan estimate. Loan estimate is going to say the estimated interest rate on your loan is 6.75%. This rate is not locked. That's very important. This rate is not locked. Why? Because if your loan officer isn't telling you there's a cost or a credit, he's just throwing a number in there, and you have no idea there's a lot of things going on behind the scene. Because he could have just said, hey, you know what? I'm just going to put 6.25 because I like that number. I like that number. I am not going to tell the client it costs $7,000 to get 6.25%. Can that happen? All the time it happens. All the time. So then you start getting closer to closing and they're like, hey, we need to lock your rate. And you're like, well, you told me it was 6.25. Oh yeah, that's going to cost you $7,000. Wait. What do you mean $7,000? What do you mean $7,000? I don't remember this $7,000 thing. Yeah, that's what it is today. That's what it is. No, it's what it is every day. If your loan officer knows what they're talking about, they've kept you up to speed the entire process. And they will tell you there's a cost or a credit. So when you get to the end, there's going to be your interest rate, and then there's going to be something called APR. APR is the cost of the loan, everything factored in. What is the new interest rate on that? And that's going to be higher. It's always higher. Now, if it's markedly higher, like a whole percent higher, you went from 6.25 to 7.25, something's way wrong in that loan. That means that they really built in some cost somewhere. You're paying for something. You're paying for a buy down. There's something in there that's really ratcheting that loan. If it's like a quarter point or a half point difference, it's kind of what's expected because there's title, escrow, the notary, certain fees. You can't factor that into the primary interest rate. So that's what the difference is. If you got more specific question, let me know and I will answer it.
Yeah, back to Alicia. Okay, so so here's what it is. At a $500,000 mortgage, there's a range, okay? So you're in the range. For a $500,000 mortgage on the high end, yeah, about $5,000 a month. For the middle, somewhere around $3,600, and then for the low, somewhere in the neighborhood of about $3,400.
You get $3,400 right now?
So it depends on what he said earlier. It depends on tax rate. I'm sorry, $4,400.
Yeah.
$4,400.
Okay, got it.
$4,400.
Yeah.
Okay. So it's going to depend on a couple of things that he said. Tax rate, okay, what actual interest rate they're receiving, and the type of loan that they're going with. Because some of the times you're going to go FHA even though you're putting 20% down and it still has mortgage insurance. So there's a lot of things that are involved inside of it, okay? The no debt's definitely going to help them. It's clear why they have an 800 credit score. But you ask another question. You say that they are looking for a $3,000 a month mortgage. In that price range, not going to happen. But here's what we're going to do, Alicia.
Buy down.
Here's what we're going to do. You're going to reach out to me after I'm done on this live, and I'm going to text you actual scenarios with principal, interest, taxes, and insurance from $3,000 to $5,000 a month, and it'll give you the purchase prices, and you know what range you should be shopping in, okay?
Now, let me give you one scenario where that could happen. Here's where it could happen. You are in a market, and you're a bang-up realtor, and you can get 3% back. If you get 3% back on a $600,000 loan, I'm going to have $18,000. I'm going to use $8,000 for closing costs, and I'm going to use $10,000 to buy the rate down. Ridiculous amount. And if I buy it down to a ridiculous amount, I can make that work. Yes, do you agree?
Yeah. Bye, Navy Donna.
Bye. Great to see you.
All right. So
Cool.
on to the next.
On to the next. That's what we always say, man. On to the next. Funded that loan. They're happy next. That's what we say every time.
Yep. All right,
Funded
guys.
that loan. They're happy
Hearts
next.
and shares. We need more hearts and shares so that we can get more people asking questions in this live. If we do not get more hearts and shares, we will not get more questions. Unless you guys ask more questions, we're going to have to leave.
Can you do zero down on a house? Can you?
Yeah.
Okay, cool. How do you do it?
You have to get the kind of loan.
You're good. You're good. You know how you do it? It's real simple. Be a veteran.
You don't just have to be a veteran.
Well, you could be a
could be a
USDA guy
regular
too.
person.
You could be a USDA guy.
you could be a non-USDA guy to get a zero.
How are you
down.
going to get zero down with USDA? There's still down payment. Someone else paying for it, but it's still down.
There's every single one of the home loans. Every single one of them. VA is if you're a veteran with a DD 214 that says honorable discharge, you can get a VA with zero down without any other hoops. USDA you can get zero down, but the hoop is it has to be in an agricultural area on the map from USDA.gov. Damn. If you're not buying in one of those areas, you can get a zero down FHA, but you have to have at least a 660 credit score. Damn. And if you don't want to go FHA because you heard FHA is this or that or whatever, you absolutely want to go conventional, you can get zero down conventional with the right credit score, which is 660 and above. So regardless of the loan type, you can get zero down.
Pretty good. Yeah, I'm not going to lie. That's some good information right there.
Thanks, man. I hope I taught you something today.
You did. You taught me something.
All right, ready to call this?
Yep. You know what? We appreciate you guys. We have been Chris and Lee. We are out.